Hello, friends. Today, I want to break down one of the most important earnings day of this quarter because JPMorgan Chase, Goldman Sachs, Bank of America, Citigroup, and Wells Fargo all reported earnings today. And collectively, they give us one of the clearest picture of the U.S. economy. Corporate spending, capital markets, outlook for AI-driven investments. These are the things I really care about. So if you only looked at the headlines, you would see that almost every bank beat estimates. But the real story is why they beat and what that tells us about the next several quarters. So that is what I'm interested in. That's what I'm going to break it down for you guys. So this will be big help. Now, I don't want to jump into every single number, every single data point for every single bank. Why? Because A, that will make the video very long. B, you're not going to get a whole lot of value out of it. You can just easily pull up the numbers using whatever your favorite tool is that will give it to you. I want to really more focus on the trends. I want to more focus on what are these numbers really telling us. So that's where I think I can add some value. Now, before I begin, let me remind you guys, I'm not an investment advisor. So I cannot tell you what to buy, what to sell. My way of investing is mostly based on business cycle. If business cycle is strong, I'm in. When the business cycle start to weaken, that's when I want to get out. So I don't really care about day-to-day volatility. I'm mostly buy and hold investor. So I have that bias. So, it is possible that I might talk about the company and it may go back down the next day because I'm not looking at it from a trading perspective. So keep that in mind. All right. A couple other reminders. Number one, Wealth Summit is October 25th this year. So that's going to be coming up very, very soon. Full day event. We're going to talk about all kind of fun stuff at the Wealth Summit. So save up that date, October 25th. So normally we do it in November, December, not this year. This year it's October 25th. Number two, at the end of this month, we're going to be doing a webinar on real estate. So we're going to talk about a lot of different things related to real estate. And this coming Sunday, we're going to talk about anything that you have on your mind. So we're going to do our discussion call. So please do join us for that discussion call as well. All right. So let's talk about what our banks telling us. So the biggest message from today's earning is simple. U.S. economy is extremely resilient. Okay. So if you want to stop the video here and move on, if that's the message you want to take, that's fine. That's what banks are telling us. Consumers are spending. Businesses are still borrowing. Corporate executives are becoming more willing to do acquisitions. Companies are issuing more debt and equity. Trading activity remains elevated. And perhaps most importantly, large corporations continue investing aggressively despite higher interest rates and ongoing political uncertainty. That isn't what you would expect if economy were heading into a major slowdown. So like I said, I'm focused more on a business cycle. So what is this telling me? Overall, things are looking pretty healthy. Let's start with JPMorgan Chase. Because they continue to set the standard for the industry. They're the largest bank. All of us probably do some sort of business with JPMorgan Chase, so it makes sense. They absolutely crushed expectations. Revenue came in well above estimates. Even after removing one-time investment gains, earnings were still extremely strong. What impressed me most wasn't simply the headline number, it was how broad the strength was. Net interest income continued growing, loans increased, deposits increased, investment banking surged, trading revenue exploded, wealth management continued attracting assets. In other words, almost every major business inside JP Morgan is working at the same time. That is incredibly rare. Jamie Dimon also made an interesting point. He said businesses continue investing heavily, particularly around AI infrastructure and technology, while also warning investors not to ignore geopolitical risk, inflation, and government deficit. Now, this might sound like what? Well, that's what bankers are supposed to do, right? Nobody can control inflation. Well, technically government can if they wanted to, but it's very hard for them to actually do anything about it. But anyhow, same thing with deficits, and same thing with geopolitical risk. So those are always going to be there. But Jamie Dimon is known to give out kind of a balanced kind of a message, so I wouldn't really take too much out of it. I mean, the main point is this: that the AI infrastructure story is still very, very strong. The United States businesses are very, very strong, and so is JPMorgan Chase. So I love that story. Let's talk about Goldman Sachs. Goldman probably delivered the biggest surprise of the day. This wasn't driven by consumer banking, it was driven by Wall Street itself. Investment banking exploded, M&A activity accelerated, equity underwriting improved dramatically. Trading revenue remained very, very strong. This matters because Goldman is essentially telling us that corporations are becoming much more confident. Companies don't pursue acquisitions, IPOs, and major capital raises when they expect a recession. They do it when confidence is improving. David Solomon also pointed towards a very healthy pipeline of future deals. That is something encouraging sign for the second half of the year. Now, just to be clear, I am invested in Goldman Sachs and Morgan Stanley and Citibank for quite some time. And I've been talking about the same story for almost a couple of years now. And looks like this is becoming stronger and stronger every single quarter. Let's talk about Bank of America. Bank of America produced more of a balanced quarter this time. Net interest incomes accelerated, makes sense. Consumer spending remained healthy, makes sense. Credit card activity stayed strong. Trading revenue were excellent. Investment banking improved as well. Unlike Goldman, Bank of America gave us an excellent look at the Main Street. And the Main Street still appears healthy. Consumers continue spending, business continue borrowing, deposits remain stable. That's exactly what investors wanted to hear. Think about it, from a bank point of view, how does bank make? Well, bank makes money when there are a lot of transactions. So under the Trump administration, we are dealing with unprecedented volatility, for one reason or the other. This is good for the banks. This is how people trade. And when you do a lot of transactions, banks make money. On top of that, like I said, this is the time when a lot of companies are thinking AI. So if you're a business owner, or maybe you're not even a business owner, maybe you're just a regular W-2 employee, and you learn how to use agents, you learn how to improve productivity. You can go find somebody running a coaching center, running a laundromat, running a restaurant, running whatever business they might be available for sale. If you can improve the profitability of that business using AI, guess what? You can make more money, right? So same thing with big companies. They're doing exactly the same thing. I mean, just yesterday, one of my clients drove from Dallas to Austin, and we looked around all kind of opportunities here in Austin that could be really, really good. Some of you guys might be interested in setting up Indian grocery stores. I mean, there are a couple of clients I'm working with right now. They have a wonderful systems to set up grocery stores, so you can look into those as well. Anyhow, make the long story short, there are so many opportunities out there for people who know how to improve profitability. Okay. So those kind of transactions actually help banks. So banks are making more money. And now all these banks are saying, hey, this trend is going to continue. So I'm more confident about the overall health of this AI trade and economy and everything now than I was yesterday, because this is exactly what banks are telling us. Let's talk about Citigroup. Citigroup is another one of our favorites. I think we got into I got into Citigroup maybe around 50 or something like that. At that point, I think right now it's probably about 141 or somewhere around that. So it has gone up a lot. So Citigroup may had one of the best quarters in years. I mean, revenue reached its highest quarterly level in over a decade. Investment banking improved significantly, trading improved, wealth management improved, um, you know, and obviously they've been in this turnaround mode, and that is actually starting to show. But one thing to keep in mind, in spite of all this, after the stock actually declined. Why? Because expectations from this turnaround story has become so strong now. When a stock has already rallied substantially, investors often need more than simply beating estimates. They need evidence that today's profitability can be sustained over multiple years. The market isn't questioning Citi's progress anymore. It is questioning whether these returns can become permanent. That's exactly very different conversation than what investors were having 2 years ago when people kind of had gave up on Citi. So overall, I mean, I like what Citi is doing. I think there's more juice into it, and it will continue to produce results. Wells Fargo. Wells Fargo did the same thing. They beat expectations. Loan growth looks good. I know a lot of people who are buying real estate or commercial loans and stuff like that. They like Wells Fargo for that kind of business. In matter of fact, Wells Fargo is always, almost always at our Wealth Summit. And they will be there this year as well. Hopefully they will be there. I shouldn't really say that because things can change at the last minute. But they showed a great results as well. Like I said, loan growth was awesome. Investment banking is looking pretty good for them. Trading revenue improved. But investors actually focus on something else. Management didn't raise guidance. That's why shares traded lower despite strong earnings. Sometimes expectations matter more than the results. The market had already priced in significant improvement. Without higher guidance, investors choose to take profit. And you're going to continue to see that throughout the earnings season. You're going to see a lot of stocks rally. For example, I would expect all the Mag 7 stocks to rally now towards their ER. And after the ER, you're going to see a lot of profit taking. It's same thing happens almost every single quarter. So overall, what does this mean for people like you? What is these banks are telling us? So this is where today's earnings become really interesting. Notice what every bank discussed. Investment banking is improving. Corporate activity is increasing. Trading remains elevated, which it will remain elevated as long as President Trump keeps the volatility in the market. Businesses continue borrowing. And trust me, if interest rates were to come down, you will see this borrowing go crazy. I mean, I talk to clients every single day who want to acquire businesses, who want to start their businesses, who want to grow their businesses, who want to buy commercial real estate, but they can't. Why? Because borrowing costs are a burden. So right now, for big players, that's nothing because they are able to generate better return. But people who are looking to generate 5-10% return, if they have to pay 10% on interest rate, that kind of defeats the purpose. So, but overall, businesses are still borrowing. Large companies are continuing to spend. None of those trends suggest there's any kind of weakness in market. Instead, they point towards continued corporate investment. And that is exactly what I want to hear. That matters because corporate investments ultimately support areas like cloud infrastructure, semiconductors, networking equipment, data center, and ultimately enterprise software. And I know with today's IBM preliminary numbers, people are worried about software a lot. And let me talk a little bit about that, even though this video is about banking. But I know some of you guys probably getting really, really worried about IBM. Look, IBM is a very strong player. They've been in market for a very long time. They have a great talent. The issue is, if I was a business owner right now, I need to pick where I spend money. Do I spend money on hardware or do I spend money on software? And businesses are saying, look, software, we can use AI to reduce our dependency on software. So we can cut some costs there. But hardware can get more expensive. So people are worried. Like, for example, this trend can continue next year. And then what are you going to do? Let's just say all of this, let's say NVIDIA chips becomes twice as expensive. AMD chips become twice as expensive. Memory becomes twice as expensive. What are you going to do then? So everybody's in this race to get to where they want to get to before it's too late. Now, eventually, this will all slow down. Everything will balance. I'm with you. Okay. I don't think we're there yet. And at least that's what all these ERs are telling me, that we're not there yet. So I think it's a priority question rather than performance of IBM. Second, IBM didn't say that their contracts are canceled. They're saying they're postponed, meaning companies are saying, hey, let me invest in AI first. Let me invest on the infrastructure, on the hardware. I'll come back to software. So I think, if you have patience, you can probably make a lot of money with IBM. But this was a big damage. I mean, I don't think this has happened in last 50 years. This is like probably one of the highest single day decline for a company like IBM. I mean, usually that will happen with microcap. I mean, literally IBM acted like a microcap today. So when you have that kind of technical damage, it takes a while for it to kind of rebuild. So just keep that in mind. But overall, if you talk about fundamental of company, it's one of the strongest player out there. So if I would be bullish on software, IBM will certainly be one of those companies on my list. Anyhow, let's come back to what I was talking about. So these banks' earnings indirectly reinforce the broader AI investment story. If companies continue spending aggressively, hyperscalers continue building infrastructure, and corporations continue funding digital transformation, then demand for AI infrastructure just doesn't suddenly disappear, right? Now, there is one risk, just want to be aware of that. Um, just because banks are telling us all this is happening right now, this doesn't mean that everything is perfect. Several banks also warned investors about risk. Jamie Dimon again mentioned geopolitical risk, but we already been familiar with that. I think for the most part, most long-term investors are ignoring it. Short-term investors going to take advantage of volatility in the market related to that. Inflation. Inflation is a concern for all of us. I mean, right now you're seeing banking sector doing really well. A lot of risk assets are doing okay, not that great because of geopolitical certainty. But um, overall, if inflation comes back, that's going to hurt everybody. So good thing is Kevin Warsh is promising that he's not going to let inflation get out of control. So that's a good thing. And I like the way he put it. He said, look, inflation is a tax on consumer. But so is money printing. He didn't talk about that, but maybe that's a story for some other day. Uh, Government deficits, that continues to grow. So I don't know how we're going to get control of that. And then valuations, But again, valuations been like this for a long time now. In matter of fact, if we think about it, valuations are cheaper today than they were when we started the year. So it depends upon which way you look at it. If you average out historically for many, many years, then you will say that they are elevated. But if you say, hey, look, the stronger growth is coming in near future, then those valuations are actually very cheap. That means the earnings will catch up with the growth pretty soon. Um, so today's exceptional trading results may be difficult to repeat if we see these kind of risk materialize. So just keep that in mind. If I were to make uh, new bets today, how would I do that? Well, corporate America um, is acting far more confident than many investors are expecting. That's why we see a lot of bears. I mean, go on YouTube and listen to people telling us how this market is beyond control. Just type in AI bubble or bubble. You're going to see a lot of bubble of a bubble, like, I don't know, all kind of crazy stories out there. Uh, so there are plenty of people who are bearish, okay? Plenty, which is a good thing, by the way. Like I always said, bearish people are very healthy for market. We should get really worried when everybody is bullish. So as long as that bearish sentiment is there, I'm okay. That means over a longer period of time, and holding is your superpower. None of the other, there's no trick straight. I mean, information is easy. Everything that I'm sharing with you, if you do enough research on your own, you can find it. I'm not giving you anything unique per se, right? You'll be able to figure it all out, you know. So there's nothing special about that. But you have to use your own thinking to arrive at your own conclusion. So the way I'm looking at it is that, hey, borrowing is healthy, spending is healthy, investment banking is healthy, trading activity is very healthy, credit quality is very healthy. That's what you would expect in an expanding economy, not in a recession. Will there be volatility? Of course. But today's earnings suggest that the fundamental backdrop remains considerably stronger than many people are actually fearing. That's why I'm staying put and continue to invest and hold. Thank you so much, and I'll see you guys on Sunday discussion call.